Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 11th of December, and the FTSE still in this dirge between the 50 and 200-day moving averages. 50-day line 74.70, the 200-day line around 75.70, waiting for an end-of-day close outside those two parameters. The 200-day line still falling, the RSI above neutral 50 at 54, so basically each of those two factors neutralizing themselves out, hoping that there'll be no break back below the 50-day line 74.70 for a retest of the 7400 area. Otherwise, looking for 76.50 by the end of the month at the top of that, that February resistance line projection, which has been haunting us since the start of the year. Moving along to the DAX, which has had a stellar 6 weeks or so, and here still trying to get to that target, very optimistic target we were looking for, up to the 16,900 area, which is the top of that post-May triangle. Above that, we've got a target for next month, or at least the new year sometime, up to 17,800. On the downside, not looking for anything worse at the moment than 16,500, the old late July peak. 50 and 200-day lines both rising, probably a week or two away from a golden cross, and obviously the run-up to a golden cross tends to be the strongest part of the cycle. The Dow has been mirroring the situation at the DAX. I suppose only the Fed can stop it now with some pre-Christmas gloom and doom, but in the meantime we've got this narrow, looks like a bull flag and continuation feature. Break of recent resistance around 36,300 could take us up to as high as 37,800 by the end of next month. On the downside, probably not expecting anything worse at this stage than 35,600, which was the old July-August resistance area and the previous high for 2023. Moving along to Bitcoin, where the rug has been slightly pulled to start this week, but at least that's mapped out the floor of that rising trend channel from the end of September. Top of that channel heading for 50,000, and we're looking for that by the end of next month. At this stage, only well below 38,000, and the old November resistance area really delaying the upside scenario. I suppose we'd also hope that support would come in with the 50-day line just below 38,000 as well. On to gold, where the name of the game is seeing this market remain above the $2,000 level. So far it has, but not by much. We were hoping that this market would stay above the old July-October resistance at 2020. We want to see that basically recovered. We're obviously below that at the moment. Otherwise, there's the risk of a test of the 50 and 200-day moving averages down near 1965. And it would be another one of those situations where the conspiracy theorists who think that this market's being pegged to the dollar near $2,000 would be right again. Moving on to the stocks, starting off with AFC Energy, which has broken through its 200-day moving average for the first time properly since the early part of the year. Obviously, there was a one-day wonder back in September. This one looks more convincing. Above 16 pence, looking for 22 pence, which is a May resistance line projection, and hoping for that by the end of next month, or even sooner, ideally by the end of this month. On to Chill Brands, where we're waiting for a tsunami of sales to come from the company. In the meantime, we've had a bear trap from below the old September support there at 3.3 pence. Above that, looking for a July resistance line at 6.5 pence to be delivered maybe as soon as the end of this month after that bear trap. Cornerstone is next, another stock which I looked at yesterday in the weekend Bulletin Board Heroes rather. I thought that was a nice tight flag, and we were looking for 20 pence initially. That's been hit right on the nose, and the next target there, as I said yesterday, up to 28 pence, and looking for that actually now as soon as the end of this month. Only back below 18 really, and the old September peak really delaying the upside scenario. Great production figures from Dekel Agrivision today, and quite a sort of a contradiction between the share price and the production at that company. Looking for a move towards at least the 2.8 pence level, May resistance line and the 200-day moving average by the end of this month, off the back of that news and the bullish divergence that has come in ahead of that, plus a higher low versus back in March. Another stock which I looked at yesterday, and it's actually up 100%, so far 170% in fact. We had a target there yesterday at 0.08 pence. I think the shares were around the 0.04 pence, so that was very nice. And another resistance line projection, which obviously I wasn't interested in drawing, up to 0.13. Above 0.13 on an end-of-day close basis, we've got a final target here, maybe by the end of this month, up to 0.19, which is the upper parallel of the second target there on DGInnovate. Great funding news, etc., etc. today. Stock which is still interesting after the director buying last month is Eneraqua, and every day bringing a nice blue candle, and many of them actually opening at the low, closing at the high over the recent past. That shows a major re-rate is in the offing, or it's already happened actually, but above 58 pence, looking for the shares to close that gap up to 91 pence, maybe as soon as the end of next month. That would be quite a coup on a technical basis, and obviously after that director buying, which I think was sometime around where the trend changed. Moving along to a stock which is maybe notorious in terms of the stock market in the small cap area, Jarvis Securities, but here we've had a W-shaped rebound, neckline resistance there at 59 pence above that. Looking for at least 82 or 83 pence by the end of this month, which is the area of the 50-day moving average and that resistance line there from July, as well as being the old peak on the way down back in November. So a nice turnaround there, backed by bullish divergence at Jarvis. Next up is Powerhouse Energy, where the news of a new CFO and also director buying has given this stock the target we were looking for. I think the peak today, 0.4 pence. We were looking for that, I think, by the end of this month. We got it by the end of, well, actually even before the end of the next session. Above the 50-day line now at 0.34. We're looking for up to 0.6 pence by the end of next month. So a nice turnaround there, and the charting worked very well, backed by the fundamental news. Another stock where it's pleasing to see a turnaround here with Rick Rule involved as well is Power Metal Resources. Here we've got a broadening triangle base, and we've had bullish divergence there. That was spotted around the low 50s. Looking for the shares to give us an end-of-day close above the 50-day line. It's 0.62 today, and then head up to as high as 0.77 and the 200-day moving average by the end of this month. On to the last few. The first one of the most vertical charts around, RTC Group, and here we've had a breakout after, as I said, a near vertical move over the last few months. Above the 50-day line and that support line there from July, looking for up to 90 pence by the end of next month, and maybe even sooner than that. Obviously, an end-of-day close today above 60 pence would be a good start. On to Wildcat Petroleum, another stock I looked at yesterday. The weekend small caps. Here we've got Wildcat Petroleum nudging the 50-day moving average there at 0.19 pence. In fact, going through that earlier on today. End of day close above that, and we should be retesting not only the peak of last month, 0.28 pence, but also filling the gap up to 0.32, maybe as soon as the end of this month, off the back of ceasefire hopes in Sudan. So that looks like a decent combination of technicals and fundamentals. That's it for me today. More updates tomorrow.